now, like I've had.
Hello, everyone. We'll give everybody a little bit of time. We have Shema here joining us today, so excited about that. She's actually the reason and the inspiration for changing our background, making it a little bit nicer. So thank you, Shema. I stepped on my, I even got a nicer mic. Thank you.
You're very welcome.
Cool. So we got some people rolling in, and today what we'll do, it's actually more of Shema's show today. She's going to go through her like top down. I'm sure everybody's getting sick of hearing me talk all the time. So we'll let her jump in a little bit, but before we actually went to live, we were actually talking about some of her data and how she has basically made it making it feeling so strongly about Wednesdays, and then her performance is poor on Wednesdays. And I thought that was a really great thing to start talking about. That's unrelated really to the show, but sometimes when you will something, you can actually make it happen. And what I would find is I would get through an assessment, and then I'd be like, oh man, I know every time I get in a brokerage account, I always mess up when I first get in it. And then somehow I would make that happen. I would like bring it to me. I would bring in that negative energy and then make myself fail the account or have a really bad first day. So let's talk a little bit about that. Like and you talk about the psychology of it. What is it? Is it you're just setting yourself up for failure, or are you like trading different on that day, or what do you think it is?
So as I started saying, I finally was like, let me do a little bit of back testing, because I'm noticing right now I'm having losses on Wednesdays, right? Like my entire, even if I can show it, right, my calendar since February to right now, every Wednesday has been a loss, right? So I went and looked back. I said, what is going on? What is happening? Why am I losing on Wednesdays? That's all, that's how you start, right? Why is this happening? Went and looked back, and I saw, okay, some days are consolidating. Okay, that makes sense. It's consolidating. The market is during my scheduled time that I trade, the market is consolidating. And that's usually the opening range for me. I trade opening range, right? So that was one thing. Okay, it was consolidating. Then I looked at some other days and I saw, okay, well, no, this was a good push. What happened? So if this had a good push, if this had a good setup here, what were you doing? What's going on? Come to find out, it's my sizing. Because I did share in our Discord recently, I adjusted my sizing, and that has been much better for me, especially with this particular assessment, right? So I'm like, okay, my issue right now is the sizing. So after I identified all of those things that, okay, my setups are still there on Wednesdays, it just seems to be that it's my sizing that may be a little bit off right now. I think that's the tweak, right? So today, even coming into the market, boom, I've set up to be patient. I was like, okay, I'm going to be trading MNQ for my sizing, all these different things that I had lined up. The market was consolidating. As soon as I opened right at pre-market, it was consolidating this morning. And I'm like, look, this is exactly what my Wednesdays give me, right? And being a breakout trader, I'm okay with consolidation. That doesn't bother me. But if I oversize, depending on how the price action is moving at the time, it can just whip back, right, and take me out, and then still go in my favor. So I said psychology-wise, because subconsciously, I feel like I know now that Wednesdays are my red day, right? And so when I went to get into the market, I'm watching it. I'm waiting. I'm being patient. It broke some of my levels. It broke my trend line. I'm like, okay, we can because there, of course, I usually have two setups. Either we're going to break here, break a resistance or something, and then I can go long, or we're going to break this support and then I'm going to go short, right? I mean, it's kind of simple, really, but you need the market to cooperate as well, right? And then you need your sizing to be pretty decent so that whatever your entry is, you have some, some leeway, right? For me, that's how I trade, you guys. So I get in and with micros at first, small size, move to break even. The first trade was great. It was, and boom, it pulled right back to me, took me out negative $22. Okay, fine. That's small, it's consistent, but I switched gears. It was like, oh, you know what? I need a little bit more size because of how it's moving. Went right in with, I believe I started with 5 MNQ and then added 5 more. And then as it pushed up, it gave me some leeway and popped right back. Boom, took me out. And that was it, right? And then it still ended up going in my favor, of course. But I was done for the day, locked out, blah, 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 right? We know the rest of the story. Negative 500 right there, right? Too much size at the end of the day. If I could have just allowed the trade to play out with the smaller size, which I had already told myself to do, I feel like that I could have mitigated that situation, right? But it was moving in my favor, and I know I can scale in, but I scaled in, I feel like, a little bit too heavy, right?
Yeah.
And that's the
And
way
that,
it crumbles.
and that's probably part of, you've been trading for quite a while. So you have to understand that you have a habit of adding extra size sometimes. And regardless of the outcome, where, you're probably going to have a worse outcome when you add size. But it's those rare instances where you do have a positive outcome. And now you've created this bias inside your mind that no, when I do this on these days, it will work out sometimes, right? And then you're thinking you're protecting yourself, but you're actually hurting yourself. And it's really hard to break that habit. I would probably recommend maybe a little bit of visualization on Wednesdays specifically, where you, before you even start trading on the day, like literally get really into it. Like close your eyes, visualize your points on your day, right? Actually visualize then the price ticking up to that point. And visualize yourself clicking the button, taking the trade, and you're taking it with the right size, right? You're visualizing the orders get filled 5, right? If that's going to be your sizing. And then you're basically feeling comfortable through the trade. You're feeling that emotion. You're forcing yourself to feel that emotion. And then while you're doing this visualization, you're also injecting logic. Hey, this is the right size. I know Wednesdays I should be sized down anyways because I have a psychological issue on those days for whatever reason, and now you're reconfirming it. And before you're even trading, you're getting practice, and you can do that, multiple times and practice those scenarios, and also practice that trade going against you and how you're going to react as a trader. I think visualization is slept on because if you look at tons and tons of studies, your brain doesn't know the difference between visualizing and actually doing it. And if you can protect yourself during that and do it in repetition, right? Do it, 15 times in the morning, right? And you don't have to do it a lot, but feel those emotions and do a really good job of controlling it. Then when you go and actually do it, you're gonna start noticing small improvements. And that's something that quarterbacks do. It's something that golfers do, and tennis players, and it's super impactful, and it lets you get the practice in without exposing yourself to risk, and you have less of those emotions associated with it. So we won't go down this path too much, but that's I would say
I appreciate that and it'll be a way to build some repetition in that regard, again, in a sense combating the habits that is already there, right? So no, I totally agree with that.
It's a huge habit. It's hard to break habits, as you know. Like if think about yourself as like a smoker, you've been smoking since you started trading, right? Think about how hard, and I know nicotine's not there, but our dopamine, we take dopamine hits when we get a winner, and that feels good, right? And then when you deprive yourself from that dopamine, or you're in a bad trade, do you think you really want to get out of the trade? No, because you don't want, one, you're fearful, you're uncomfortable, you feel like, the walls are caving in on you, and you become irrational and stuff like that. So it's just, it's a hard habit to break. It's the dopamine, it's the feelings and stuff like that. And visualization should help with that. So today we're doing 50 likes. As soon as we get 50 likes, we will do the giveaway. We'll let everybody do that. Just keep in mind, guys, we've had some people that have won like 5 giveaways, and it's like, hey, can we share it? Other people should have an opportunity. So just keep that in mind. Raj, you can go ahead and start the slideshow. We'll get into that now. So the challenge for last week was create a list of tags that will be beneficial to your trading and start tagging every trade, track patterns, and improve your performance. How did everybody do? We'll do a quick little question, see if people actually did it. And if they did, please share your results. Did it help? Did it not really help? What did you find, if anything? Did you find little nuances with your trading, or did we not do it? Keep in mind, this is what will make you a better trader. It's not the cheapest account I can find, and then I can get past this assessment. And I think everybody thinks passing the assessment is like the end goal. You're at the top of the mountain. It's like, no, you're at the base of the mountain. And it's like an iceberg. There's so much more to go, right? It's just, it's very deceiving. So keep in mind, putting in this work, and I talk with traders. I know when they put in this work, they're not becoming magical, the best traders ever overnight, but they're getting better. And the whole thing is, let's make sure people get better. You don't want to become stagnant in trading. And when you do, you're not growing. And without growth, you're never going to find success. So please put in the work, guys. Lone Wolf Trader, she's one of the people I talk to. She's great. She's been putting in the work, and she's doing what she should be doing. She's not worried about how much money she can make right now or anything like that. She's sharing all of the data with me, and it's like, I'm actually pretty surprised how well she's tracking everything. She's doing phenomenally. And this is what we want to see. We want to see people get better. I want to see the growth. I want to see you track your setups. Let's get you out of the circus that is assessment games. Let's work together to get better. And I think that's where our tools really help traders. Let's see. Helped a lot. Chandler. Yeah. Look, you're still going to make mistakes, guys. It's trading is, you get the dopamine hits, you get the fear, you get the fight or flight stuff going on. It's very emotionally charged. And the more you can disassociate yourself from, I guess, results, and understand that results are going to be results, and you can't control the outcome, right? Don't be an outcome trader. Try to be a process trader. Focus on the process, and then you'll get the results that you need. And the only thing you can control as a trader, regardless, you'll get into a trade, you're like, oh, I hope this thing goes up, or don't hit my stop. And you're hoping, right? You're praying, you're like, oh, please don't, right? Because you're going to get locked out on the day. How far does that get you? It doesn't help you. So stop worrying about the outcome of the trades. Just protect yourself with correct risk management, and the results of your trades will be what they are. And as long as you're trading well and with a process, you're going to have a lot more success, not just short-term, but long-term success. You're going to build a good foundation. But slacked off when tagging. Yeah, so, and it's this comment here. Go ahead and show this one. So I created them, but slacked off with tagging the trades consistently. Okay, so if you find yourself slacking off or not putting in the work, reduce your workload, right? Then only focus on one thing. Don't make it really complex. Don't feel like you have to do too much, because then you won't do it. So start a habit of saying, hey, I am at least going to track one of my setups, just one of my setups. That's it, just one. And you can trade more, you can do all that stuff, but just track one setup. So at least you're putting in work and you're finding value from what you're doing, and it's not overwhelming. It's not you're doing so much that you don't want to do it. Don't overwhelm yourself, because then you're going to get burned out. You don't want to do that. Start small, start slow. Don't overpromise and underdeliver to yourself, because it's really hard. And that is trading, unfortunately. Definitely helped. So definitely helped, tagged all the trades. Great to see which tags I need to avoid in the future. Yeah, I talked to somebody, one of our traders, our funded traders, that ran into some issues. And, he found with the data, all I got to do is stop doing this and I would be profitable. And, it's much easier said than done, right? You can tell yourself, you can make all these promises yourself early in the morning, and as soon as the market, it's like that saying where you always have a plan for a fight until you get hit in the face, and then it's like it's game over, right? It's the same thing with the market. You have a plan to do, I'm going to follow my risk today. I'm going to only take my trades, and then before you know it, you're in, trades that you should be in, and you're doing stupid stuff. And less is more in trading. And if you can eliminate just some of the bad stuff, it's going to make you better over time, right? Don't expect miracles overnight. That's not the way, you changing an habit happens, right? It's through continuous, consistent practice to get better, right? Hey guys, so I'm going to try to get through some of these, and then we're going to get to Shema, because her time is important and we want to respect her time. So maybe you guys can pick a few backup winners in case the person you pick turns out to be someone who already won. Yeah, that's actually a great idea. Let's do that. So let's go ahead and get back to the slideshow. And Raj, okay, thank you very much. Right now we do have a 40% off. Clover is the code. It's basically, we worked on our back end. We actually stopped our sale for about a week to kind of make sure all of our admin stuff was on point, and we really wanted to make sure that response times and chat and everything else were going really well. And we've got that. We're also going to be adding some new stuff coming up, hopefully the next week or so, and then we're going to be running something that should be pretty exciting for everyone, and everybody can show their stuff and see what they can do. Cool. All right, top-down analysis. It's your time, Shema. So I will now be quiet, and let's hear
it. Thank you, Brian. Hey, everyone. So I'm Shema. As you know, I've been trading now. This is started my 5th year of trading. I am a personal trader turned prop firm trader. I'm currently only trading here with TFD. It has been quite a journey. I'm thankful for the discoveries that I'm actually having here. It's taking a little bit longer than what I'm used to, but as I said before, what kind of growth do you get if you're uncomfortable, right? Or rather, if you're comfortable with it, like you're not getting any growth, right? So when you think about a rose that grew from concrete, right? It had to push through that concrete to be there. So it has been a change in what I'm used to, but I'm thankful for it. So I was invited to go ahead and go over my top-down analysis. It's something that I've developed over time. It's something that I utilize if not every day. Well, there's a certain time frame levels that I use every single day, but on the weekends, I usually do a master top-down analysis technically. And it gives me just kind of like an overview of where everything is, right? It says, am I there? Okay. Everybody, I think I'm back. Okay. Where did I stop at? I was saying that I do a master top-down analysis over the weekend where it gives me like sort of an outlook of what the market is doing, like where could we be heading, right? Nothing is set in stone, right? Price action is going to do what price action does, but I like to give myself some type of understanding of what the market is doing and where we could potentially go. So I tend to always have a long or short in mind, right? I'm not just stuck on a particular bias, because I found in my trading that can sometimes work against me, just being stuck in a complete bias, right? So here we do have my chart, and I'm going to just go over again, like basically my master top-down analysis and where I get to for my day-to-day. So on the weekend, I usually do a weekly outlook, and I usually start on the weekly. At times I may start on the monthly, and that's usually at the end of the month. End of the month, because we've closed the month, right? That means we have a candle that's closed, right? And sometimes I'll do it mid-month just to see like where we've gotten to. Right now we are mid-month, so it's okay to take a look at it. Also, this is my actual trading assessment here. I did have my Wednesday losing day today. Totally okay with that. I know that in trading, we're going to have, winning days and losing days. So it's totally fine. So nevertheless, here we do have the monthly chart. This is in Q. I've been trading on MNQ lately. We're not going to have all the data just because this is like probably one of the contract rollover charts. So whatever the case, we're looking for what direction the market is going in. Just simple as that. What direction are we going in? Technically, from here, the whole this whole push up, we have bullish momentum, right? Straight bullish momentum. Now, as we look over into where we currently are, which is March, we're kind of rolling over, right? We see that rollover. That's great. That gives me some overage right here. This is, I like to use the little rectangle. See if it's working. Okay. Get a little rectangle. And now we have some overage here, right? This is now considered my supply zone. This is my resistance. Right now we're seeing resistance. We have these 3 candles of wicks of rejection, right? That's, what was this, December of last year? We have January, February, and now March is pushing down. So this is technically telling me, oh, okay, the market is rejecting here at the highs. So maybe we're seeking some liquidity to the low. That's it. Simple as that. So then I'll come here and find some support. Okay, where is there some solid support that maybe the market can fall to and reverse from there, right? Or an area that maybe the market can come to and try to break through. Let's see. What I tend to do is, now we do see some of these months with some wicks down here, but there's a shelf right here. And when I say shelf, I mean basically a resistance turned support, right? Because here, this was March of last year, actually. The market was trying to break here. Then April, it reversed, it fell down, right? And then by May, it actually broke that resistance, right? We pushed back up, and then we retested here in June, and then it just pushed back up till we have these highs, right? So, okay, for me, it's a great place to have a support. This was, again, once a resistance, and now it's a support. I like to put my lines usually based on the bodies of the candles, not necessarily the wicks. As you can see here, my wicks I tend to use as an area of where there's a bunch of liquidity. So again, this was the supply zone based on these wicks, right? Even this month, what month is this? July. We have this wick right here, and at the top of it, that's where most of we had that rejection, that from this the body of this candle, a little wick of this candle, and then both of those wicks from those candles, right? So again, I like to really draw my lines from the actual bodies of the candles. There are times where I do use the wicks, and those are sometimes really key levels that the market will go to, that wick, because when you look further down on a smaller time frame, you see where that's either a tweezer bottom or a pin bar, right? Those are certain areas where the market just likes to tap and then push back from. So it's okay to have those levels there. But right now we're just on a bigger overview and just going through where I kind of like to have some of those levels, right? I also am a trend line trader. I like to have trend lines in place. As we can see, this is running up. What I would usually do is grab a trend line and then have some touches. With trend lines, for me, and like most people, you want to have at least not one, 2 to 3 touches on your trend line. So far, we have, do I even have my little brush? Let's see. Did I go past it? It's the writing tool. No. There we go. I don't even have it starred. Okay. Let's see. What color is it? Okay, it's blue. That's not a good color. Let's go with white. Sorry, you guys. I haven't utilized this as much. Okay, there we go. It's white. So we have a touch here. We have, oops, let's grab it again. We have a touch here. Even these actually kind of broke it, right? But either way, we have these touches, this touch, this touch. So even with this right here, with this trend line, this was probably a really great trade, right? Pushed up, boom. We have these trend lines. And now, as you can see, we have broken that trend line, right? So that's key for me, again, in telling me that we may be headed towards a shift. There's a shift in the market, but price is bouncing off of this support. Again, this is on the monthly. This is what I do over the weekend. Let's head over to the week so we can see what else that we can see in the market. Sometimes I'll adjust the trend line when I go to a different time frame, just to make sure things are lined up more. It's moving a little slow, you guys, sorry. More aligned with what I'm working with on that smaller time frame. So again, we do have this trend line that has broken. We see now here on the weekly where the price is just rejecting from these highs, right? We also have this trend line that has been broken. Let's actually put in another support right here where price broke through. It was once a resistance. Price broke through that. And again, as sometimes I think I forget when I'm trying to explain to people what I mean by a support, because I'm just so used to doing it. We have multiple touches here, right? Where price tried to break it once and it couldn't break it. We fell beneath it. Price finally broke above it, but then we retested it again, broke through it, hit our trend line, made our way right back to it again, right? Resistance, broke across it again, right? So that's what you look for when you're looking for support and resistance lines, right? I'm a very simple trader. Again, I like to keep things very simplistic, right? But then we saw price just danced along it, right? Like that support till it finally broke it, right? And that's what we have currently going on. What day is this? This is February 24th. So February, we broke that. It was a break of structure. When you see people write BOS, that's that break of structure, right? So now here on a weekly, we have price breaking through that area. It broke the trend line and it broke our support right here, right? Resistance turned support. So now we have this fall that we see that was on the monthly. So again, we have this full uptrend that has now slightly turned bearish, right? It's not saying that we can, we're going to crash, oh my gosh, to the bottom. But again, this just gives you levels and an idea of what price is trying to do and where you can potentially trade at, okay? So that gives us the weekly. I will also, at times, again, another trend line. We can have a trend line on this side, right? Why is the trend line on that side? Well, because price is falling right here and we have the touches. We have one touch, two touch. This bar didn't actually touch it, but now we see this bar is attempting to pull back to touch it, right? But this gives us another trend. We're on a downtrend right now. That's what the weekly is showing us. But however, we do have our support that price has pushed to here. And now we see this reverse because we have a wick that pushed up, right? And then on this second candle that's currently trading right now, it tapped back into this area, this demand zone, if you will, right? And now it's pushing back out of it. So this could either be that support that's holding. We could hold right here, break this trend line and continue, or price could move side to side, right, sideways, or we can continue to break through. We don't know till we know. And that's why I say I usually tend to have two ideas in the market of which way it can actually, give me an idea of where it's going to go. Not to mention we have further supports down here, right, where price could go to. Let's actually, since we have a pin bar here too, I'm going to go ahead and put in, I like them to be aligned, but I'm going to put in now a demand zone. And this is where price right now hasn't touched it yet, right? So that gives me an idea, okay, price could actually see some more downside. But right now we are pushing back up. So let's just wait and see what price does. And we are on today's Wednesday. This is the weekly. So there's still some time. We have what's today? We have FOMC today. Price can do whatever it wants at this moment, right? But right now what I'm seeing is price is attempting to have a bearish push to the downside, but it's also reversing currently right now, right? So then I would just move over to the daily. Now we are on our daily and you see how our candles we get more and more candles, right? That's why I like to put my levels in on that higher time frame. Right now we see that we're technically in a wider range, right? Looking from that angle, we're in a wider range currently on NQ. Here at the top of this this break of the trend line and rejection here of this supply zone. So the way that I'm looking at it, I'm seeing this is falling down. Let's adjust it again. Okay, just gotta adjust the levels. My trend line. Now when we adjust on the daily, we have actually broken that trend line to the upside. But and that's why I don't just trade just straight off of a trend line. I need other factors. I need confluences, right? I need more than one confluence. I don't just get in because, oh, this broke, let me hop in. Because imagine here, the trend line broke. I took the trade to continue to go up, and the very next day it just pushed right back down. That's why I don't just take the trend line trade. Now, someone can do that and may have they stop, here or down here somewhere. Totally fine. That's their risk. That's what they want to do. But me, I need more than one confluence for me to take this trade, right? Because for me, I'm also looking at the idea of this possibly being just a bear flag, right? This could be a bear flag forming. Am I certain? No idea. But from what my textbooks tell me, right, this is a nice downtrend. We have a sort of consolidated pushing back upward. No one in queue, it could do whatever, right? We could push here, take out these highs, whatever the case, we can retest this this zone, this break of structure rather, that we broke from. We can retest that and then push back down. Who knows, right? But for right now, what I'm looking at is a bear flag, right? Even though we broke that trend line. So there's a lot of different ways that it can, price can actually go. But again, I'm just looking at where my levels are. So now we're here, like I said, on the daily. The daily is showing me a bear flag. I like to put when I'm trading day to day, I have a previous day low and a previous day high. That lets me know if the market is there an inside bar that we break above that previous day low? That previous day high. Because if we broke above that, we could potentially see more upside, right? Depending on how price is acting at that area. Also a previous day low. Price could, like here, what candle is this? Sorry, the daily. This red candle, this is our previous day, right? So technically, I think I have it on this one. This would be the previous day high, right? Oh, I have it on the other one. Let's use another line. So this is our previous day high right here. And then we have our previous day low right here. So technically right now, price is trading within there, right? So this is like an inside day. It's inside of the previous day. So price could do sideways for most of the day if it felt like it, right? That's what that tells me. We haven't broken above it. We haven't broken below it, right? And which makes sense because what I'm looking at is, again, this potential bear flag that price is currently trading within, right? So that would tell me, okay, we're probably consolidating a little bit today. That's totally fine. FOMC is coming up. So usually it's very volatile. So we could break out of this in either direction, but we're also still keeping in mind that we're actually trading beneath the midway of this parallel channel, right? Of this bear, quote unquote, potential bear flag. So I'll give myself the previous day high, previous day low there. Now I will head on to my 4-hour. Here on the 4-hour chart, depending on which way, again, I want to go in the market, I may look for some breakout levels. I'll look for some imbalances within the market of where price can actually reach to. That's what I had in my chart prior to today's trading day. What do I mean by imbalance? So the market had some aggressive selling, right? And I guess it's just easier for me to spot because I'm used to seeing it, but it's usually just a blank in the candle. There's no other candle before it, right? There's no retest of this zone. Like this candle had fallen and then pushed back up, but when the market started to really just dip back down, we have gaps, so to speak, in these certain candles when it was falling down, right? For me, it's like a blank space. And so I would take my rectangle, and this is where I would identify which books that I've read, it's called an imbalance. There's an imbalance in the market. It just quickly sold off. So there wasn't a lot of buying or selling there. It was just a flush, right? If you will. With that flush, sometimes it leaves gaps. It's on the footprints. If you've heard anyone talk about footprint charts, they say that there's sort of nodes above and below, and then there's a gap right there, right? on a footprint chart is like a single print, right? There's nothing, there was basically no aggressiveness. There's no fighting there between buyers and sellers. It just completely sold off. So it left a gap there. That's an area of quote unquote liquidity. Now, they don't always get filled, okay? They don't always get back touched per se, but a lot of times they do. I will say 88 to 92% of the time, price will retouch that area, okay, before it continues wherever it's going, okay? And we can see that here. There was a gap left here, an imbalance right here. Price made sure it touched that and then continued to fall, right? And so the same right here, that I identified this area based on, again, this candle basically breaking structure. Let me put that line there. I have a break of structure right here where price bounced, and then it broke, right? Then when it broke, we had this one candle that retested that break and then continued to fall. And then we fell till we found some support down here and started to do what we're in right now, right? So I identified that on this 4-hour chart, and I usually write a 4-hour imbalance. That's how I have it in my chart. So I would wait for price to, well, not me. Actually, when this trend line broke, if I was trading this at that time and this trend line had broke, my idea would have been, okay, we're going to this area, and I would have taken that trade. When I measure it, that gives me, for me, I say 900 ticks, but for other people, I believe it's like 90 points. That's a really good trade for me. I mean, I'm good with 200 ticks. Okay. So 900 is really nice, right? Whatever the case, I use these certain imbalances when I'm setting up my chart to see where price can potentially go, right? And price went there, pulled back, and we see what else is happening. Price now had created this other flush. So it gave some more imbalanced single prints rather. And now you see prices already filling those single prints up. Could price potentially go up further? Let's see, I'll put a trend line. We broke that trend line. Yeah, more than likely it can. It can go up. But also we got to remember this was just the resistance that it broke out of, right? Put a line there. Let's do right here, the bottom of this. So why I put the line right here is because we have these two areas of always look left. When I was learning how to do all this, always look to the left. I haven't looked too much right now because I was on the other screen, but you can look to the left, and I'm sure it's some type of resistance or support rather that price had fallen to and it held, right? But for the most part right now, because I don't want to use everyone's time either, price fell to here, then we fell here and we popped above it, right? That tells me personally there's some support from a prior time. That's why I put that line here, because price pushed up to it again and pushed up and rejected. Price pushed, and then we got a little bit over it and rejected, pushed up again and then rejected, pushed and reject really strongly right at that point right here, right? So that's telling me that there's some sellers here, strong sellers. The only way we could break through that, in a sense, we need some really aggressive buyers to come into the market, right? So right now, that's what we're even seeing here on this 4-hour. Price is having sort of a battle to break through that level once again, right? Even though we filled in most of these single prints, it's a possibility that this could have been just this push right here, could have been they call it a look above and fail, right? We looked above this resistance and failed to hold that area, right? And now price at the same time is trying to do it again, and it looks like it's actually failing. It's not enough confluence yet. The candle, I wait on candle closes too. That's very important. That was it was a key in transforming my trading, was waiting on the candles to close. I got to a point, and that's still one of those habits I'm breaking as well, but I do it way more than I used to. I at first didn't even think about the candle closing. I was like, oh, it's moving, let me get in, right? Like, what are you doing? But you don't know till you know, right? So now we wait on the candle to close, because technically this is a 4-hour candle. It says we're closing in an hour and 20 minutes. This could, it could, like where it's pushing up, it can close as a rejected candle. We don't know. It could close above it. We don't know yet. We'll wait to, that close. But anywho, excuse me. This could be this is another area I would be watching in the market. If we are above it, I would look for some longs potentially to either take out this high now that we've put into the market, or again, hit more of some of this consolidation where it would rest right where the parallel channel is. I don't use a lot of fib and things like that. I do it sometimes if there's like, I guess, a major drop and I want to see potentially if it aligns with what I'm looking at. And this is just, this is what I do manually, just things that I've, come to learn and understand over time from reading different books and from watching different people on YouTube, and just, just over the years, just paying attention. You start to recognize patterns. You start to see how the market moves and what makes sense and what doesn't. So then I'll move down. Let's go finish up. I'll move down to the 1 hour. This is where day to day, I start with looking at my daily, and then I'll go all the way down to the 1 hour, 30 minute, and then 15 minute, usually watching for entries. So now we're here on the 1 hour. Oh, you know what? Actually, on my 4 hour, I do like to put in support and resistance levels just to see where the market has gone to. Right now, my 4 hour resistance is here. Why am I putting a 4 hour resistance here? So again, the bodies of the candles, there was a color change right here, right? This is a green candle. There's that tried to push up but rejected, and then the red candle completely rejected. But outside of that, even if you look here, it's the same thing. We have a green candle and the red candle switch. I usually put all of my support and resistance at the body of a candle switch, the red to green or green to red. Right now we had a green to red, that shows me my resistance. And then that's the 4 hour. And then we have a 4 hour support here. 4 hour. My 4 hour support here. Why? Because there's a color change. And with that also, you see the wick supports that this is a support, right? Because the wick is pushing up, it's pushing up. So that means it's pushing, the support is holding, the buyers are holding and they're pushing the market back up, right? But I like to use the bodies of the candles. Now, of course, yes, this could be the next one right here. I'll just move it so you can see it. The next one here, where there's two bodies of the candles, that can be considered a support as well, and it's still supported. I just like to use the most current one. That's just how I'll trade. But I would keep that in mind as a level while I'm trading, that price could move all into this area, and that's considered my demand zone. So what I really want to just be selling from right there? No. I want to wait to see how the market reacts to that area, right? Because that's where my support is. I wouldn't just get into the trade because this support breaks and let me just go. No, it could have some backlash going into this zone, right? But whatever the case, this is my 4 hour support. And then I would go to my 1 hour, and that's what made me think about that, because I do have 1 hour support and resistance levels as well. But on the granular scheme of things, you can see here, prices just trade, and see our yellow lines from our previous day high and our previous day low. Price is just right now trading within that. So you may not always get a nice, like, look how it priced the wicks and things like that on it. Price may not be as clean because we're trading within, it's an inside bar, it's an inside candle. Price keeps pushing up and pull it back, pushing up and pulling back. That's what we've seen like all day so far, right? But now here on the 1 hour, I would have also already put in my 1 hour support and resistance. So let's see what we have right now. The candle hasn't closed yet. It looks like it will. So this will potentially be a new 1 hour resistance. But currently right now, my 1 hour resistance would actually be up here still with the 4 hour resistance. And then, oh, did I change it? Nope, not yet. 1 hour resistance. And I do have the color as purple just so that it's not green and red like the 4 hour. It just helps visually when I'm doing things. But we do have a support right here too that's the candles have already closed, which again makes sense because 1 hour support. Look at price. Price, broke through, fell to a support, and then we've pushed up to it a few times, right? And tried to break it until we finally broke above it, right? So that was once a resistance, now it's the support. which would have been great on a trade at 7 a.m. I'm a PST, so that at 7 a.m. would have been a great trade as price broke through it and then held it to push up again, right? Although the candle closed red, if you were someone trading in this crazy market like me, you may have been able to take that as a long because we held that support. We broke this trend line price. It was a nice push for the break of the support. Whatever the case, that's our 1 hour support. The market, this 1 hour, closes in 14 minutes. So I would end up moving this next 1 hour resistance to here. Why do I use support and resistance? I use support and resistance because, again, like here, this gave me a signal that we can we're holding this and we can clear some more of these single prints in this candle. That would give me the confluence to go long in that trade, right? And then same with this resistance, we're seeing more resistance again, right? Price is rejecting so far right now from this area. And like it was a little bitty, let me open it up, you guys can see. This little bitty, like because price didn't touch right there type, we have this support where price pushed and broke off of. This was an area that the price went to. Price went right to here and it's rejecting. We can actually just put a line in there so you can see what I'm saying. There's one little area right here. We can put it to the bodies of these two candles where the color change was. We have price right here tried to break that area. It couldn't. We actually, this is a green candle, so probably opened here, pushed down and broke across it. And then we just had this, a little back and forth here at this one line. Then price fell to it, pushed off of it, fell again. We have support, two candles right here supporting this till we finally broke it. Then this candle retested it, right? This break of structure. And then fell. Now we have our same candles that are trying to break that same area, right? It's about looking to the left. It's about looking to the left and understanding break of structures. I think break of structures is one of the strongest, to me, one of the strongest understanding and ways of understanding market structure and understanding different times to take a trade, right? And that's breaking those support and resistance levels. That's why I don't know. I don't think I'll ever leave support and resistance. It's something I learned early on, and it's something that's gone with me throughout my trading. No matter what I learn, I still go back to support and resistance. So anywho, 1 hour support and our 1 hour resistance. And that's where, and then also my trend lines. I like to put trend lines on my 1 hour. I find it way stronger on the 1 hour time frame. But I will also at times head over to the 30-minute, which, breaks up that hour. It gives me an idea if there's a trade idea. I like to go for trades where the candles sometimes don't have a wick. Why do I go for candles without wicks? Well, or like tweezer bottoms. This is like an equal low, right? Sometimes price likes to sweep those lows. It likes to sweep that area because price didn't, technically go any lower than that. It stopped, right? This wouldn't be the best idea for a swing low per se, just because this candle did kind of wick all of this out. But mind you, say this morning, this trade here, I saw all these equal bottoms, right? Meaning price never broke it. It was like creating a support, which is great. It's a support, which it pushed off first. But once it pushed off, it still came down and took out all of those lows. I like trades like that. That's the type of stuff I look for. I believe on the 15-minute, let's go down one more. Yes. See the 15-minute here, we had these two candles that had no wick, meaning to me, there was no liquidity swept, right? The price just kind of opened and pushed up. That's it. Like this, the red one, it closed, the green opened and pushed up. There were no wicks there. There's liquidity sitting there. There's somebody's stop loss sitting there. That's what liquidity is to me, right? So what did this candle do at 6:30? Well, it opened and then it pushed down and it grabbed that area. And then it pushed back up, right? I mean, the price did what it did, right? Put back down and blah, blah, blah. But my point is, I like to look for trades that I'm not sitting in the trade all day, right? Some people do, they would have actually entered from here and went up. There's so many ways to trade, right? There's so many ways to engage in the market, but it's about identifying what actually works for you, right? Because at the end of the day, we can have all these levels in the world, but within these levels, how are you executing? And that's, even for me, clearly I have a red day and I'm talking about this, right? But the point of the matter is all of that plays in too. You need your sizing to be on point, right? We talked about psychology with Brian earlier. You need your psychology to be at a certain level, right? We're going to always deal with ups and downs and back and forth. We have daily lives. We have things that we go through, right? But we have to also know when to put those things aside so that we can just take this as face value for our business. This is our business. Again, there's certain ways that you're going to figure out that works for you that doesn't work for everybody else. The trade that I ended up taking today was this push to the upside. For me, I had an area marked off. So I had to have all of this area marked off on my MNQ, and I was going for some of this upside. I saw this here. So I had two trades in mind. It was, hey, if the market opens and we aggressively push to the downside, then we're going to sweep this and I can take that trade. But if we open to the upside, I'm going to take this upside for this break. I went to take the upside because it actually opened and it was going to the upside first. And I said, okay, I'll just go with that. I didn't mind which way it went. I was okay with either trade, but it broke the trend line. It held my support. I know it could have swept the lows, but I was like, hey, we're going to the upside. Let's take the upside move. Was it the best move? I have a L for the day, maybe not. But at the time, it was working out. I was in profit. I just didn't close and move it to, my break even or anything like that till it reversed hard and then, took me out. But look where it took me out for, the low. It just took that low. And then still the trade I did was good because we still pushed up, right? So again, it's just, we're not going to be 100% every single day at the end of the day, right? So let me finish up with the 15 minute. I also have certain levels on the 15 minute. Here we see, like I said, price is already rejecting from here. But what I would do now is I would give myself a supply zone right now. We have a supply zone that we broke. Let's see here. We have a break of structure as well. Again, why and how is this a break of structure? Oops. Because price pushed up and rejected. Price is sitting on it at the same, supporting itself here. We're trying to break through and it finally broke through. So that gives me a break of structure there. Again, depending, like this one, I didn't really necessarily put it on the body, but here on the body, that was that one little support from this one candle bounced off of it. I liked it here on the wick, just because it gives me like that cleaner. For me, if we break above that, I know that we're going to go up more, right? If we stay below that, then I see that we could, continue to go to the downside. Whatever the case, it's just looking at the chart. It's just seeing what you can see in the chart, right? Same here. And that's why some people end up with 1,000 levels, right? Because you can have a level here too, right? I think it helps when you are a newer trader, of course, when even intermediate, just to see what's happening, to see because like price is already reversing, right? Because we're at a level of support. It just is what it is, right? There's not a lot of single prints here. Also, it may be, let me see, we have a trend line going. We do have a trend line as well. I'm just stretching it out, you guys. We have a trend line as well. Price did break it, but we see prices pulling back up, right? If it breaks back above, we may see some more highs, because we do have some equal highs right here. Not saying it always does, okay? And that's why we need to wait on the candles to close, because this could just be a retest right now. We could retest, it closes in 5 minutes, we could retest, and then the next candle could push back down or it could push up. But if you have the levels in place, then it allows you to kind of get in an eye line of what the market is doing. That's what I use it for, right? And then you wait on candles to close and more confluences for you to actually take an entry. I do have 3 charts up when I'm trading. I have the 15-minute up. I have a 1-hour chart that I switch between 1 and 30 minute. And then I have the 5-minute chart, because sometimes there's better entries as far as like adding into my trade and things like that on the 5-minute chart. And I also have my trading view up because I have the 4-hour up, and I have other levels, or certain indicators over there where it's like volume profiles. I do trade with a volume profile also on this chart. And usually I have my 200, as you can see here. So like this, I'll have this up more than likely on a trading day. And this also gives you more visual of right here. We see that there's this node in the volume lets me know that there's volume here. There's buyers and sellers here, right? There's a lot of price action that's happening right here. So you would need to wait. I need to wait if we break above. And it's crazy because I put these levels in before we open this volume profile. And it's telling me what I wrote in here in my chart is, okay, we have some consolidation or excuse me, we have some price action happening right here. I need to wait to break above this level to see more upside. That's what that tells me. Same with here. I need to break this below this level to potentially see some of this downside, maybe fill some of this gap, right? But we also have a node here. So you would keep all those. It's a lot to trade in. There's a lot to trade in. It's not just wake up and buy, wake up and sell. Although people sell it that way, I tend to think, I mean, hey, maybe it's possible for somebody, but for me, I'm one of those people, let me see what's going on. Okay, let me get an idea. Let me get a feel. But yeah, with this trade, we broke the trend line. If we break this, we could potentially see some downside. We can take out these equal lows, basically just retest in that area. And we also have this full node right here where we could, dip down and then push back up. Who knows? Again, FOMC is in a few hours. So yeah, that's how I trade. That's how I do my levels. That's how I trade. Yeah, I'm just one of those that like to have some understanding, see what's going on, and make it all make sense.
Wow, you just put on a clinic.
Okay.
Your approach. I mean, hold on, claps, because that was a clinic, and you kept it easy, right? Usually people just like crazy overcomplicate top down. You took it from the very top, and it's very clear that this is the method that you use every single day, right? You have a ton of clarity in why you're making those decisions. You articulated everything. All I got to say is we let you cook and you cooked like crazy amount.
Let it cook.
You cooked. So amazing presentation. Yeah, as you can see, everybody's clapping for you because it was really simplistic but elegant at the same time. And you're so dead on. Like it's not as simple, but it is simple. And it's like you talking through everything. I can tell you're an experienced trader, like talking about volume, single prints, and all this other stuff, because all those things actually do matter. So it's like the combination of all this stuff together.
Exactly.
And that's what makes trading hard, is like filtering all the data and figuring out, okay, with all the data, where are we going, right? And then by you marking up the chart like you did, it's like sometimes you're in the middle, right? Don't diddle in the middle. Wait for a really good edge, right? Always playing the edges, and you have a really good game plan. And what's great for you is when you set up your game plan on the day, you don't say, hey, I want it to do this. It's like, well, if it does this, then I do this. If it does this, then I do this, right? Those are like hypos, really, with like Nagro, right?
Yes.
Yeah, exactly. So amazing. I didn't really know what to expect, but I was blown away by how you killed it. You cooked. And I'm glad you shared everything with everybody. You made it really simple. So thank you so much for joining us today.
Simplicity is the way, like too much is just too much, right? It can overcomplicate things where you're kind of stumbling over yourself. At some point I've told myself, okay, I'm done learning, right? Like I don't need to know. I don't need to learn anything else per se about this, right? Let me apply. At a certain point, you have to just apply. You can't just keep learning, and some of the information is regurgitated on top of that, right? Like a lot of the times it's the same information over and over. They just change the term. They change the name, right? So once you understand the origin, right? Once you get that basic understanding or knowledge of it, like I said about the imbalance, they call it now fair value gaps, right? Like there's all these different terms for it. And it's just an imbalance in the market. There's single prints here, right? So the market wants to retest that area. It wants to take out that liquidity because it was only touched once, right? That's it. Like it's not as I don't know, as complicated as it's been over the years now.
It's simple but hard. Right? It's simple but hard, super hard, especially when you mix in like the decision-making process, and then you become very either paralyzed, or then you start beating yourself up because it's like, oh, I analyzed that wrong. But it's really nice to have hypos like you do, because it makes it very simple. You don't come in with a bias. You're like, okay, well, if it breaks this way, then, maybe I'm looking for this. And if it breaks this way, I'm looking for this. And it gives you two scenarios where you're not just dead set on, I need to go long or I need to go short. And earlier in my career, what's weird is like, at first I was very, very short bias. Like I just wanted to short everything. And I think that's because
I only took long when I first started. I never.
Well, I started in pump and dump with Ross Cameron. So I was like, I want to short everything and let's just short the market. And it's like, well, take a step back, buddy, because the market kind of goes up. It usually just continues to go up. So I had to force myself to get long, and then I got really long bias. I'm like, all I want to do is take longs, and it's weird because now I've kind of gotten to that point where I'm like, I don't care what way it goes, just as long as I'm not trading in the middle of chop. And generally, where you have a lot of balance, right? And you showed it on the chart. When you have balance, you're gonna kind of continue to balance, right? Yeah. And you're a breakout trader, so you like to get outside of balance areas. And you're probably looking for particular things. But maybe next time you come on, and hopefully you'll come on with us, you can share a little bit more of how you enter and why, and that would be more of your triggers. Your top down is amazing. Really great job of articulating it. A lot of times people make it really muddy when they explain everything, but I can tell you do this stuff every weekend because it's very fluid.
Every chance I get.
Yeah.
It's funny. I used to be intimidated by charts. I want to say that. I came from a cash app, so just one line, to Robinhood with just maybe two lines, and then I downloaded Webull and I was scared. I was like, oh my God, what is this? Right. And then it's something that I love. I absolutely love charting. So thank you. Thank you very much.
Yeah, it takes time to learn what you learned, and it's not any one thing where you learn it from one place. I can tell you it's a meld of a lot of different things that you've learned through all kinds of different teachers, and then you pick what works good for you. And then that's how you build your strategy, and that's how you build like your market and basically your framework, right? You have a very specific framework that then gives you an ability to basically enter based on triggers and however you want to call them. And again, terms are interchangeable, right? Fair value gaps and the ICT concepts versus other things. It's all the same thing.
And so and I didn't learn any ICT. Actually, I'm not an ICT trader, but I am a believer of embracing what resonates and discard the rest. So it's exactly what you're saying. The things that I've come across and I've learned over time, if it worked, if it hit me and worked with me with what I'm already doing, oh, this is great, but if it doesn't, it's okay, that makes sense, but it's just not for me, So
and that's great. And that's why with trading, it's very personal, and things that work great for you maybe don't work great for me, right? And that comes down to your understanding as well as your psychology, right? So my psychology, I would have a heck of a time waiting for some of your levels, because it's like you might not see a level that you put in there for like a couple days, right? Which makes it tough, because when it finally hits, and if it doesn't work right away, then you're like, oh my gosh, it's not working, stuff like that. So great top-down approach. Loved it. I think people need to watch this and download this video if they need some help with top-down, because you killed it. You made it very easy to understand, and great job.
Thank you.
So let's do the giveaway. If we have any other questions for Shema, we'll give those people a couple minutes, and then we'll let her answer any of those questions, and then her time is very valuable, so we'll let her get going. But Raj, go ahead and start the spin. Shema, do you want to call out the winners?
Yeah, I'll do it.
Okay, cool. All right, spin it up there, Raj.
Everybody.
Good luck.
You'll have fun here. You'll learn something. Eduardo.
All right, Eduardo.
Congratulations.
Mr. Martinez. Yay. You bring the energy, Shema. Appreciate it.
Thank you. I can say it. Rob Whitlow. Congratulations.
Yeah, all right, congrats, everyone. If those people have won before, what we're going to do is we'll just randomly select out of the emails that we have. We'll spin the wheel again. Like we said, we want to share the accounts with other people. The main point of our firm, hopefully you guys are starting to realize this, is we actually want people to get better. And how you get better is putting in the work. And education and stuff like that. And it's really important. Shema uses the tools. I can tell you right now, she does. I looked at her
All of mine are
stats.
tags. I could have showed you. I've tagged
Yeah.
everything, Brian, since that day. You were like, oh, you didn't tag. I was like, wait, I just started.
But that's how you get better. You have a process,
Absolutely.
and you can continue to get better, right? And that's the main takeaway. Is like sometimes when you go somewhere else, yeah, maybe you'll pass or whatever, and it's like that's not the end goal. It's like even if you don't have an assessment with us, at least sign up for a practice account and practice. Get good.
Yeah.
Like I'm not even telling you to sign up for assessment. Start with our practice account.
I started with practice.
Just collect your data, because through collection of data, you're going to find some things and you're going to learn about yourself. And the more you know about yourself and the more you can get better, the better you're going to have in the future, right? It's just like anything you do in life. It's like the more you do it, the more repetition, the more good behaviors that you do, you'll get better and better and better. All right. Any questions for Shema? Let's see. Raj, have you been looking through these? How long have you been trading?
This makes my 5th year. I started March 2020. I didn't know it was the pandemic. I was pregnant with my daughter. I was leaving my job and I was like, what am I going to do? And it literally was a light bulb. It was like stock market. I was like, oh yeah. Cause I've always wanted to get into it and I had money saved and I said, let's do it. Took $300 to Cash App. That's how I started. Personal.
Nice. I can tell you're seasoned because you have that seasoned mindset where you just have a really good process, and it's super important. And your framework definitely tells me you've put a lot of studying and hours into this, because most of the concepts that you understand, singles and stuff like that, it's all the same stuff that I've, concluded, like, hey, this actually works. This actually works. Trend breaks actually work. And the things that actually work tend to stick around in your mental, I guess. Like you remember those things that actually work versus the stuff that doesn't. You're like, that doesn't make sense to me and I don't get it. And I'm not seeing it play out that way.
I like the metrics you guys provide here because although I've had my playbooks, right? I had a playbook designed for when I traded gold, right? Now, when I switched to NQ and futures, I felt like I had to, not that it didn't work the same, but the price action, it could do something different, right? It can have certain nuances at certain times, right? Which it does, different for sure, different opening ranges for gold and NASDAQ. But whatever the case, I like that here with the metrics, I'm able to reinstill what my playbook was, right? I'm able to understand from the data aspect that this does actually work, like not just me storing it in my head, right? Like, oh, I know this works because, it worked before. I actually have the data to prove this actually does work. You can keep sticking with that. You know what I mean? Like,
and that's the hardest thing about trading is sometimes you'll come up with these biases in your head and you'll like scalp or something. You're like, oh no, I make money scalping. And then you look at the data, you're like, oh, I don't make any money scalping. Like I need to stop doing that. Right. But you don't know because you have this bias. It's like, no, I remember when I made a bunch of money scalping that one time, but you forget about the 50 other times you lost your butt on scalping. Right.
Absolutely.
So having the data to be like, this works, this doesn't work. I need more of this, less of this. It's game changing. And I don't think people really understand. It's like, that's what's going to make you different from a gambler versus somebody that's actually approaching the market with a statistical edge that's going to make it in this industry, because this industry it tends to chew people up and spit them out. And, through education and data, that's what should drive your decisions, is the data. So great. So challenge this week. Shema, do you want to take this one?
Yeah, you guys. So challenge for the week. Brian usually gives us our challenges, but let's have a different challenge. Let's go off of our top-down analysis. So what we need everyone to do this week is do your own top-down analysis every day. Okay. Start from the higher time frames, mark your levels, and plan your bias before the open. And if it's not a bias, right, just plan a if and then statement, right? If market does this, then I'm gonna do this. If the market does this, then I'm gonna do that, right? Make it simple, make it plain. I think that's like one of the best ways that you can approach the market.
Amazing. Awesome. I agree. Cool. So this is just our sale. So look, even people that don't get into the funded brokerage account, understand I have time because we're still, new. We don't have, unfortunately, we're not attracting the gamblers. So fortunately and unfortunately, right?
Fortunately,
So we still have time to help people, right? And hopefully that never changes. So if you're in an assessment, you're struggling, you feel like you're up against a wall, like we're here to help people, and just reach out. And when I see people that are struggling, I will reach out to them, but I don't know, everybody, and I definitely don't see everybody post in Discord that they're having a hard time. So if you need help, just message me, and I got time. I'll pencil you in, and we'll make time to talk to you and try to make you better, right? That's what we're trying to do as a company. Is we're trying to get people to understand that they can get better day by day and stop doing the gambling stuff, because it's not helping you and it's hurting you. Somebody the other day shared something like trading is kind of like being an alcoholic in a sense, because like when you're good, right? And you follow all your rules, you don't drink anything, you can resist, and then you get to this certain point, it's like you go on these benders and it's like, oh my God, what's risk control and what's this? And you add all this size and it's weird, but I think it's a good correlation. It's a good kind of concept to think of yourself as an addict, and you have to put in good habits, and you got to have a good process, or else those addictions are going to get you, and it's going to leave you in a bad spot. Please take advantage of the coaching, even if you're not funded with us. We're going to try to do what we can to help you, and it's all about trying to help people, because we all went through the same things. Trading's very hard. Let's work together as a group and add some accountability to it, because trading is very independent and very lonely, and there is very little accountability when you have to hold yourself accountable. It takes a very tough mindset to be critical of yourself, right? Because that hurts. It is like a TFD rehab system, right?
Yes.
But we built it that way. We built it that way, and I know people get frustrated with stuff. It's like, but look, we're trying to make you better. And that's the way that we know, because we've met with so many people, and we're traders ourselves, and I know it's cliche, but we built the tools knowing what we know about trading and how freaking upsetting it can be and how frustrating it can be, and with the risk and all the other stuff. And we really try to get people to think about trading in a different way than other firms do. Less is more, right? All right, cool. Awesome. See you guys next week. Shema, thank you. I think your top-down approach was amazing. Anybody that needs a refresher, please watch this video back. Maybe we'll just clip it to then upload it with your permission, Shema. We'll just clip it and just do your top-down approach and get rid of me talking. And we'll just put just you, because I think your pacing and the way you explained everything, it was phenomenal. So we'd love to have you back.
Awesome.
And other than that, thank you so much for your time, and thank everybody else. We'll go ahead and email everybody. If that winner is a repeat winner, we'll pick another one and we'll get those assessments out. We'll see you guys next week. I don't know, Raj, do we have something planned for next week?
No, but we will have something exciting for sure.
Okay, cool. So we will figure something out for next week. Same time, same giveaway, same time, same place. There you go. My co-host, Shema, here.
Yes.
Awesome. Okay, cool, guys. We'll catch you next time. Bye.